Hello and welcome to Rajya Sabha Television. You're watching a brand new edition of Policy Watch with me, Frank Pereira. The recent midterm review of foreign trade policy promises to scale up exports as the government believes exports are the engine of growth. And if the country wants to grow at 7%, then exports need to provide that extra stimulus. The review aimed at mid-course correction focuses on policy measures to boost exports of goods and services and increase employment generation and value addition in the country. A first look suggests the government is sensitive towards the fact that the manufacturing sector needs considerable encouragement to perform well and better integrate with global economy. The missing middle appears to have been thought about and good sense has prevailed, which is reflected in this review, where the government has offered incremental SOPs to exporters of traditional manufacturing such as leather, textiles, processed food and agricultural sector. On this edition of Policy Watch, we will discuss the way ahead for India's external economy. Joining me on the program today are Priya Ranjan, senior journalist, Saurabh Chandra, former secretary DIPP, Arvind VirmaniI, former Chief Economic Advisor to the Government of India, and Lalit Kanodia, President, Indian Merchants Chamber, Mumbai. Thank you to all my guests for joining me on this edition of Policy Watch. Dr. VirmaniI, I'd like to begin with you. How do you think India's external economy has performed in the year 2017?
So the performance has been reasonably good. Now, of course, one can go into the causes of that. Clearly, before 2017, the decline in oil prices has contributed a lot, but they were pretty stable in 2017. So that's not a major cause in 2017. I think it's improvements in the internal economy. But you know, when we discuss the oil price, the terms of trade thing, you have to also remember that there are also commodities and demands which are simultaneously affected. So it's not only one side of the picture that we gain from an oil price decline, especially when there's a huge deflation in commodities across the board. So one has to keep that in mind, especially when you're projecting forward. The second point I would raise with respect to your preamble on the new policy, I think, it's been almost like, if I'm not mistaken, almost 10 years since we have had any major reform of EXIM policies or in tariffs and duties. So I think that's a major gap, which I think there's a great opportunity. I mean, if you want me to elaborate, I can do that, or I can come back to it.
Yeah, we can come back to it at a later stage. But, Mr. Chandra, going forward, do you believe that oil prices are going to be a concern for us? Do we need to start, cushioning ourselves for what might happen in the international oil market?
The oil prices are showing an upward trend. But first, let me come back to the manufacturing bit. The government is on the right track. Manufacturing has to be pushed up. If you were to see the countries which have the largest trade surpluses, apart from the oil exporting countries, they are all manufacturing giants. Whether it is Germany, whether it is Japan, whether it's China, or whether it's Korea. Now, how do we make our manufacturing competitive? How do we increase the share of manufacturing products in what we are exporting? Needs certain structural changes.
And can we compete with someone like a China?
We can if we start with factor reforms. Reforms which are long overdue in land, labor and capital. Land availability, labor laws, cost of capital, all that becomes important. Depth in manufacturing, innovation, research and development, technology, that is critical to increase productivity. Then what I call enablers, infrastructure, ease of doing business beyond what the World Bank looks at, plus energy costs. All these factors need to be looked at if we are to boost manufacturing. Sure.
Let me bring in Mr. Lalit Kanodia into the picture. Now, Mr. Kanodia, as far as exports in 2017 are concerned, do you believe that they were adequate? What needs to be done so as to we take it to the next level?
Well, I personally believe that we have a problem on hand. If you look at our exports, the trade deficit this year in the half year was about $75 billion. Last year it was 105 in the whole year. So I suspect the gap between import and export will explode to in excess of $150 billion. That, in my opinion, is a matter of great concern. And it needs attention, urgent attention. Now, the oil prices predictions now will firm up and are likely to move towards $65 a barrel. The other major import is gold, which also has increased this year. And we have very poor control on the imports. Therefore, I think we need to look at exports very carefully. And I believe there are many things we can do to increase our exports from India.
Okay, and what are these things?
One of the major initiatives which I think did not do well is our SEZ policy, export zone policy. I think this can become a great spur to exports from this country. See, after all, when units are set up in export zones, and particularly foreign companies, they bring in capital, they bring in technology, they employ labor in India, and they generate foreign exchange. So it is obviously in our interest to increase their presence in the export zones. Unfortunately, in the past, we imposed the MAT, which I think was a big dampener on these zones. So I think we certainly need to urgently scrap MAT because we are, after all, competing with Sri Lanka, we are competing with Vietnam, we are competing with Bangladesh. And therefore, if we continue with MAT, there will be a severe discouragement of units being set up in our SEZs. The other thing that I entirely agree with Mr. Chandra is that we need to increase the export of manufactured products. And I think there are many things we can do in this respect. For instance, I believe that our textile itself can be increased by $100 billion a year. And China is vacating the textile field because the labor costs have gone up. So this is one area which needs, I think, immediate attention.
Sure.
The other area is things like motorcycles, for example. We are the largest manufacturer of motorcycles in the world. We make 13 million motorcycles every year. I see no reason why we cannot give them a tax break on their export profits. If you look at it marginally, this will not cost us anything, but can generate significant foreign exchange.
Sure.
So I think the government needs to do something very quickly before this goes out of hand. So if our imports exceed export by 150 billion, which is likely to happen, I think we will have a problem.
All right. Priya Ranjan, do you see that as a problem area, you know, our exports and the deficit that we have with our export and imports?
Yes, you know, I'm not concerned about the deficit so much. The current account deficit, yes, as Mr. Kanodia was mentioning, has definitely widened in the second quarter, but it's still 1.2% of GDP, which is well within the manageable limit. And, you know, the current account deficit in other words actually means it's the way a country taps into foreign savings, because our current account deficit of 1.2% of GDP is more than compensated by the capital account and overall balance of payment. Even after the widening of the current account deficit in second quarter, we have a overall balance of payment surplus, which is actually increased from $8.5 billion to about $9 billion. So that's not the point. Point is exports haven't performed well in 2016-17 and or 2017. You know, despite, I would say, if not a very favorable external environment, a benign environment, and exports should have done well. They haven't done well because our domestic, you know, situation is have been such that they do not actually encourage exports. For exports to go up, as I was on your program, you know, a few days ago, as I was mentioning, two things would be crucial. One is competitiveness, that you should produce to export, not only produce to export, but be competitive in whatever you are producing and trying to export. Only then you can export. The second, of course, would be market access. You have to pry open markets and see that you have the access so that you can export. Now this, all talk about manufacturing and all that. We missed several buses in the past. I'm not very optimistic about our immediately being able to, do anything dramatic there to be able to compete with China and other great manufacturers, even as we are slipping by even in competition with Bangladesh, Vietnam and Sri Lanka. Now, if you look at it, you have to see where we are competitive. We could be competitive in various services, especially we are already, definitely competitive in IT services, for instance, and we are competitive in services, but unfortunately, we haven't had a conducive external environment for services exports to go up. We are largely a services economy today.
Sure.
And we could be aiming at increasing our manufacturing.
As the world is changing, should we also adapt then?
We have to adapt it, but so the world is not changing in a favorable direction insofar as we are concerned. As the, just now collapse of the WTO ministerial meeting in Buenos Aires suggests, the world is moving in, and it's essentially happened because of tough stands which have been taken respectively by India and US.
And US, yeah.
That's not very good signs insofar as further opening up and liberalization of world trade.
I'm taking that point forward,
particularly in areas
of
our interest, services, for instance.
Dr. Virmani, when everyone is looking within, when the world economy is becoming protectionist, is that a problem for India going forward?
Right. So let me very quickly put the perspective. Some very good points made, but for viewers, the current account deficit depends much more on macro factors, as Dash just said, on the savings and investment balance. But where the exports imports come in, you can have the same balance at this level, or that level, and the higher your exports are, the higher your imports will be. So a higher level of both exports and imports given the same current account, which is absolutely right, less than 2%, we are not worried. Okay. So the idea is why do we want higher and higher levels of exports and imports? First thing to remember is you cannot have higher exports without the higher imports. And what's the advantage? Advantage is your growth will be higher. It supports growth. It facilitates growth. Okay. So that is the thing to keep in mind, why we are so interested in exports, but don't forget the import. You can't protect yourself and say, oh, I will just export. Only China can do that and keep accumulating money because they have a different system. Okay, but we don't want to go that route. Secondly, quite right about competitive. So when we are looking outwards, we have to look at non-tariff barriers. Now, when people keep saying RCEP, this agreement on Asia, on China, I was part of the discussion on the Indo-Chinese FTA, etc. The problem there is the non-tariff barriers of some of these countries are very obscure. Ours are pretty open. As Mr. Swacha will tell you, we have to publish everything. We have to make a law. Everything is clear.
Sure.
But those fellows can do anything. So how to pry open those entities? And the third point is on services. Very correct. Both the points made earlier. That the problem is this: there was a time when US was very interested in opening up services all over. Then they found that India and other countries will benefit more and they may benefit less. So they've become totally disinterested. But we are very interested. What we are trying is this service facilitation agreement is very important for us, and I'm sure the government is trying to do whatever it can to bring such a thing about.
Sure. Mr. Chandra, the midterm review of the foreign trade policy, the Commerce Minister very clearly said that we need to look at new focus areas, we need to look at new products, and we need to look at new markets. Is that the right way to go forward?
This has been the theme for a number of these policy reviews. And in the short term, I don't see too much happening. You have to take a long-term view of it. And another aspect that seems to have been missed is import management. It was talked about 5, 6, 7 years ago. How do you reduce your dependence on oil? How do you reduce physical gold coming in? How do you reduce your defense imports? Now, you have to take a very long-term view of it. It will probably take 5 years, 10 years. In addition, you have to get integrated in the global value chains. You have to become system integrators, because that is the way manufacturing and business is now being done. All this needs to be looked at. And it's a truism that every country makes policies in its own interest. Now let's look at the agriculture, the agreement on agriculture. What happened? What they are saying is, in the West, that cash subsidies are not trade distorting, which are much, much larger than what India gives. But minimum support price is trade distorting.
Yeah, cotton growers in the US, I think, are given $110 for every $100 spent.
Which is just not correct.
Yeah.
Which is just not correct. So we have to make our policies to further our interests. We are going to have a difficult time, because America first policy. There is an element of protectionist there. Then Brexit will have some impact. The German chancellor has become weaker. So all this is going to impact how much we can export. But the projections for next year's growth of global economy is about 3 to 4%. And we should try to take advantage through the areas that the Commerce Minister has mentioned.
Sure. You know, Mr. Kanodia, as far as, you know, the tag of being the largest growing economy in the world is concerned, you know, that tag has gone to China in the year 2017. Can we regain that title back from China in 2018?
See, whether we are number one or number two is, I don't think, that important. It's more psychology than anything else. We will grow close to 7%, which is admirable by any standards. I don't think that's much of an issue. I think there are many other issues that we need to be confronted with. One, you know, I met the finance minister last week, and I told him that I have a psychological barrier by using the word current account deficit. Why do we say current account deficit, and why don't we replace it with current account surplus? We seem to be mentally, you know, we are reconciled to the fact that we will remain a deficit. And I'm afraid I don't agree with that. You know, I started the software industry in India. And last year we exported $116 billion worth of software. I can tell you there are many things we can do that will accelerate exports without any doubt whatsoever. The export of services, I can tell you, is going to be very difficult. The export of manufactured products is far easier. And there are many, many things that we can do, we can export, where we have the laws of comparative advantage on our side. But we need to look at that. Now, what accelerated software development and export? Pramod Mahajan took the very brave step of saying there'll be no income tax on profits of software exports for 10 years. What happened? 8 billion exports in 2000-2001 exploded to $116 billion. So I think we need to take some bold decisions and look at it on a marginal basis. And I'm sure there are many, many things that can be done. I can give you many ideas where we can be a winner with exports. So I'm not pessimistic. We just need some bold steps.
Okay, we need bold steps. We need some radical steps going forward is what you're suggesting. I hope that does happen, and we see that happening in the days to come, of course. But taking the discussion forward, Priya Ranjan Dash, foreign exchange reserves, do you think that is a cause for concern for us?
No, not absolutely not, because you know, foreign exchange reserves, which were around 300 billion, are now over $400 billion in the last 2-3 years. Now, we are always acquiring more and more reserves. I don't think the reserves, because we are acquiring the reserves because of the capital account surplus that we are having. So there is copious investment inflows, you know, both portfolio and FDI. And as a result, you know, FDI in the last three years or so have gone up 70%. Now that if you look at the investment flows, we do not have a problem either with regard to management of the current account deficit or with, in fact, a gap at a higher equilibrium level, like Dr. VirmaniI was suggesting, is what should be the desired objective, that you can have a gap of 2-3% of GDP, which will in fact be an additional tapping into foreign savings of 2-3%. That's how you go into, you know, the basically if 7% growth, unlike what Mr. Kanodia is suggesting, is neither the potential growth for this economy, nor is what most Indians are satisfied with, nor is that kind of growth going to solve our problems. So what we are looking at as an economy, particularly after the way now we estimate the growth, GDP growth.
The finance minister said 8%.
We need, yes, we need 8% actually inching up to a double-digit growth and sustaining it over a decade or so to be able to make material difference. So for that kind of growth, you need exports. The argument for exports is not the current account deficit. Argument for exports is growth and employment. Now, to achieve that, as I would again repeat that you would need two things. You need to ensure that exports, what you are trying to produce, both by way of either manufacturing or services. I am more optimistic about services, less about manufacturing, because I do not see anything actually happening on the ground to make manufacturing competitive vis-a-vis the actual competition that you see in the global markets.
Sure.
So you could do a lot, and that's going to take time, as Mr. Chandra is suggesting, in case of manufacturing to make a difference. But those efforts must go on. But you should try that. India is already largely a services economy today, and there is of course agriculture. Given the way the world environment is moving in terms of the policy environment around the world,
sure,
you are not going to have greater market access into agricultural produce. Your agricultural products are not going to be competitive because our farmers are pricing ourselves out of the global market. What you can do, that you could have, and you already have an advantage in various services, you should try and push those services to that. In the IT services, which is your leader, you
sure,
have a problem in the US, increasingly so protectionist. You have to try and break that barrier and try and push other services. That is where your exports
Dr.
can make a
VirmaniI,
difference
as everyone is looking within, do you believe that there is a scope for India to be a leader now at a time like this?
But I want to conclude with the policies, which, see, the environment is changing. For the first time, growth is reviving. Since the global financial crisis, export growth worldwide, I'm not talking India, has been low.
Yeah.
And suddenly now Europe is doing well, etc. So it's a key point for our main weakness has been we are not part of the supply chains. We are very weak on the supply chains. So I would say I have suggested two things. There's been about 10 years since we had any exempt policy reform or tariff and duty reform. So I very strongly urge the finance minister, I've done it in many forums, but I want to do it on this, is that have another look at exempt policy and your imports, export duties. And one point on services. So I think it should be broad-based. I don't think we have to choose between manufacturing and services. And one example of services where there's a lot to be done is we have a net negative deficit
sure,
on education. We send so many people abroad. I mean, it's so much better to invite those fellows to come here and set up. I don't know why we don't change our regulations. So instead of our people going there to study, we get the best benefit of that here.
Sure.
We will have a huge external we will generate jobs and do much better.
Okay. Concluding remark from you, Mr. Chandra, on expectations from the budget. Can we see some kind of impetus in the budget?
The budget will have to spur export growth, for the simple reason that that is one area which can handle the biggest problem that this country is facing of unemployment. And before concluding, one point on the growth rates. China is almost an $8 trillion economy. We are about $2 trillion. Now, $8 trillion economy growing at 5%, and a $2 trillion economy growing at 7 and 8% is not the same thing.
Sure.
It may be a debating point, but
Yes.
nothing more than that.
Yes, true. All right. Mr. Kanodia, your concluding remarks on what are your expectations from the budget?
Well, I had a very interesting meeting with the finance minister, and he gave me a very patient hearing. And I emphasized the fact that exports is crucial to India's economic development. I emphasized the fact that no country in the world post-World War II has increased its GDP and per capita income without exporting. This includes Germany, Japan, Taiwan, South Korea, China, and so on. So we have no choice but to put the pressure on increasing our exports if we are going to increase our GDP and per capita income. We had all the who's who sitting there at that meeting, including the economic advisor, and they all nodded their heads. So I really think we need to really push that. I'm afraid I don't agree on the manufacturing front because I can't think of any country that leapfrogged from agriculture to services. It has not happened in the history of the world. We have to pressurize manufacturing. We have to go into manufacturing.
Right.
And there are many things that we can do where we are competitive. I have no doubt about it.
Okay.
And I can think of many manufacturing items that we can export if we pay attention to it.
Right. Priya Ranjan Dash, please close the show for us with your concluding remark.
No, if you want me on budget, then I would say the same thing. You know, that the budget, I think, should tackle those three things on the import side that Mr. Chandra was mentioning. One was the increased import of gold. Number two was, you know, what to do about the duties and taxes in petroleum sector, because oil prices are inching up.
Yeah.
And, you know, the third commodity, Mr. Chandra, you were mentioning
Was defense.
Was defense. Now, on all three, I expect major initiatives from the budget.
Okay, all right.
That's what it should be doing.
Okay, all right. On that note, then we'll call it a wrap on this edition of Policy Watch. I'd like to thank my guests, Priya Ranjan Dash, Saurabh Chandra, Arvind VirmaniI, and Lalit Kanodia for joining me on the program and putting things into perspective for us. That's it from me. See you again next time.